So let us have a conversation about the mergers and acquisitions and corporate restructuring. These are the three things actually we are going to understand. In that, the term merger, the term acquisition, and the term corporate restructuring. These are the three terms that we have. Now listen carefully, a discussion about the same. We understand that say, the objective of the financial management is maximization of wealth of equity shareholders. This is the objective of the financial management. The objective is that say, we should take any decision being finance manager of the organization in such a way so that it is able to increase, it is able to maximize wealth of equity shareholders. With that we take all the decisions. Whether we are studying time value of money, whether we are studying cost of capital, capital structure theory, working capital management, derivative, foreign exchange risk management, you name anything in the financial management, ultimately all the efforts are going in one direction, that we should be able to maximize wealth of the equity shareholders. I want somebody of you to write in the chat box that how do we measure wealth of equity shareholders. Friends, wealth of equity shareholder is measured in form of market price of equity share. We understand that the current market price of the equity share is measuring wealth of equity shareholders. So every time, whatever the efforts actually we are making is going again in one direction only, that we should be able to maximize wealth of the equity shareholder, which is measured in form of current market price of the equity share. Now, as far as the market price of the equity share is concerned, it is calculated by a number of ways. And there are a number of things which influence the market price of the equity share calculation. I am focusing on one of the portion that we understand that the earning of the company. There are a number of factors which are affecting the market value of the equity shares. And one of the factors which is having an impact on the market price of the equity share is the earning of the company. So we can say that as a company, as a finance manager, say you would like to increase your earning. There are a number of organic ways by which say you increase your earning, and there are certain inorganic ways. What we are discussing right now, say in terms of the merger, in terms of the acquisition, in terms of corporate restructuring, say it talks about certain inorganic way by which you will be able to increase your earning, and with that you will be able to increase your market value. We understand that over here, say in the chapter of mergers and acquisitions, we are going to have understanding of the discussion of the acquisition only. There are hardly one or two questions that we have of the merger, and there are hardly one or two questions that we have of the corporate restructuring. Otherwise, basically the entire chapter is focusing only on one point, that is acquisition. So you can have some visualization like this. Let us say that there are two companies, A company and T company. For our discussion, A company is the acquiring company, and T company is target company. That is the way there are two companies, acquiring company and target company. So most of the time we are going to have a decision making from acquiring company point of view, that whether the target company should be acquired or not, and if at all say we are going to acquire the target company, then what is the optimum price with which we should acquire the target company. From the target company point of view, similar there is a decision making. The decision making is, let's say, is it more profitable say to join any existing business, and whether we should be acquired by somebody else is better, then we carry on the business independently. That is what's the kind of decision making that say the target company finance manager is required to make. So over here, say throughout the chapter we are going to have most of the time learning point from the acquiring company point of view, let's say whether we should acquire the target company or not. And from target company point of view, say whether we should be like merged into a new entity or we should continue our business separately. That is what we are going to have the decision making. Dear students, as we understand the term merger stands for, there are two existing companies and it is getting merged in a new company. In terms of acquisition, there are two existing companies and one of the existing company will acquire the running business of other existing company. And in case of the restructuring, the same company is being restructured. That is what we understand as the technical meaning of the mergers, acquisitions and corporate restructuring. And we are going to have discussion for most of the time for this point. Going further, as I told you, let's say we have to keep in mind being finance manager of acquiring company, let's say by taking this decision, will I be able to increase wealth of my shareholders? That is what you have to keep in your mind. Similarly, being finance manager of the target company, I have to keep in mind, let's say should I get merged into a new company or should I continue business independently? That is what I have to keep in my mind. Again, say I have to make sure that say I should be able to increase wealth of my equity shareholders. That is the way we are supposed to take a decision.